Where is all of the money going? Hello and welcome to today's Daily Blitz. Now in today's video I'd just like to dwell on something I think is something of a short-term trend that we're going to see a lot more of until certain issues in the monetary plumbing have been resolved. Now in last week's Daily Blitzes we did dwell on some of the interesting things that have occurred over the market crash. So you saw stocks going down and you also saw bonds going down and gold. Everything was effectively going down because everyone needed currency. So market participants did not want assets per se, they wanted currency, they wanted liquidity. Either to finance some margin calls or to deal with other liabilities that they had to deal with on a short-term basis, or they simply wanted to sit out in cash and wait for asset prices to stabilize. Now, what I found most interesting about last week's crash was less about the ravaging of the equity market and more about what was going on in bonds, because as you probably know, bonds are considered a safe haven, or at least investment-grade bonds are considered a safe haven. And last week, during the rout, they were sold off very harshly as well. You even saw the safe haven of safe havens, the US Treasury note, getting sold off on the same day. Pretty much everything ended up down that day. Commodities, bonds, and stocks. And that's best exemplified in this chart here, which shows you that actually the amount of bond selling by market participants is pretty much at an all-time high, certainly in recent history. And what that led to was this interesting chart here, which shows you that the amount of value that was actually destroyed last week was much more severe in terms of its pace than what occurred during the 2007-2008 financial crisis. One aspect of this was indeed people selling these bonds. Market participants were not interested in going into the bond market to try and find some kind of safety. Instead, they just wanted currency. So we seem to be entering into a regime which is more about currency than it is about assets. And that's why I think we're going to see a lot more action in the dollar. While the Federal Reserve is printing vast quantities of it and trying to make it available to banks, banks are constrained by an awful lot of regulation and are unable to partake in this gigantic liquidity pile. And as a result, there is a shortage of dollars throughout the financial system. So that's why in the short term, I think it's more important for people to be focusing on the movement of currencies rather than those of assets. Specifically, take a look at the dollar. But there you have it. That's all for today. Thank you very much for watching. Be sure to subscribe and click the notification bell down below, and we shall see you in the next one.